China has surprised. We were expecting an interest rate cut, but we weren't expecting it to be this soon. It's the first rate cut from the People's Bank of China since 2008.
Now, the benchmark deposit and lending rate will drop by 0.25 percentage points and will be effective from tomorrow. Banks can also offer 20% discount to the benchmark lending rate, widening from previous 10%.
Geoffrey Yu's run over from UBS to talk us through exactly the implications of this. We knew this was happening. We didn't expect it so soon.
There was already talk onshore in anticipation of like a soft CPI print up ahead and also some bad loan numbers, for example, and this could confirm the need for some stimulus, and then they would cut towards the end of the month, but we are surprised that it's come so early.
So why have they done it so early? Just because the situation is more worrying than that they thought, or this is to preempt markets?
I think it's somewhat to preempt market, but also, I mean, CPI's Bloomberg expectations are 3.2% right now. We'll probably get something in that range. The loan number is going to be a bit more interesting. There has been reports onshore that a lot of the loans, although you're going to get a good number, perhaps 750 range, it was only all the lending happened in the last 10 days of the month on the back of expectations of a stimulus. So you can't use 10 days worth of data to mask 3 weeks worth of weakness and weaker macro backdrop as well globally. So they just want to be better early than late at this stage.
How weak is the macro backdrop internally? You look at metrics that tell you what's going on in the real economy, like electricity consumption, and they're not saying you're growing at 8%. They're not even saying you're growing at 7%. Some would say.
So probably the market's not used to China churning out numbers like this, and it's already being reflected in commodities markets and also commodity block currencies like the Aussies, for example. And we've seen a sharp reaction in risk already. There was already some support from expectations of a stimulus over the last week or so, and now Aussies reacted. What we want to see up ahead is whether they follow on from this interest rate cut with, let's say, front-loading of projects and infrastructure from the next 5-year plan. And if you tally up, maybe we will get some large numbers up ahead, and this could support a risk appetite across the board, really.
So are you expecting these extra support measures in the next couple of weeks or months to make it work? Do you have to be quick?
For them to deliver, the maximum impact, they probably want to be quick. But China is linked to the global economy. They don't want to use all their bullets, only to be dragged down by the US and the Europe. Yeah. If they let's say announce a big stimulus in the next 2 or 3 days, and then Greece exits the eurozone, and then the whole world is suddenly not looking like a great place again, and they've effectively wasted quite a few bullets. So probably will be drip fed bit by bit, but it's a good first step. Whether it's enough, probably not.
This is a period in which I thought you were going to see stasis because of the fact you're seeing the power transfer. The fact that you're getting this during that power transfer, is that a hint at how worried internally the authorities are?
Well, the fact that we're seeing a power transfer this year in China, means that in the wake of potential political instability, they need to deliver absolute economic stability. So the stasis in the economy, perhaps, but that's not good enough for stability. So they just want to make sure they're putting out all stops to make sure that the economy is running at a sufficient pace to make the power transition as orderly as possible. It just helps their case in general.
Geoffrey, overall, the biggest banks have actually, met their loan targets for the last 7 years. We're talking about, for the first time this year, that they would be in trouble. How much of a worry is this? Is this also what they really want to avoid?
Well, I think if we look at the loan numbers for the first few months, their run rate's actually still pretty good right now, so they should be able to hit their targets. And now, with talk of stimulus, and now that they've made loans cheaper by lowering the floor on loans to 8% of the benchmark rate, that's actually to stimulate demand. We think supply hasn't been an issue in China throughout. Demand is the problem, and maybe this could just do the trick, but we shall see. It's probably going to be the first of many steps to come.
Give us your FX hat story now. Do I keep buying the Aussie?
Well, right now it depends how they follow up. We may get a pullback, let's say, if the loan data actually confirms and is weaker than expected, and Aussie is still beholden to Eurozone events and the US environment as well. But right now it's actually looking okay. If Bernanke signals strongly hints at QE today, and on the back of China's rate cut, then it's just every single reason for you to start buying commodity block and its associates right now, and Aussie's first in line.
Are we going to see some neighboring countries of China in Southeast Asia actually also cutting interest rates, simply because in this kind of environment, when you have the US possibly doing more QE, China cutting rates, you can't be left out?
Well, right now they probably want to look at their own numbers, but China is just such a strong presence, especially in Southeast Asia already. They've increased trade links markedly over the last decade or so. If there's enough stimulus from China, the slippage, the positive slippage into the rest of Asia made just enough to keep them on hold. I think for other emerging market currencies and the central banks, their reaction will depend more on how developments in the US and in Europe in particular unfold more than China. But now what China's done is just simply an added bonus. So we might see more inflows into EM, or rather the outflows which are already starting to see out of EM, that may slow for a while.
Can I just get your take? We're talking about China a lot, but can I just get your quick take on where I should be trading cable and where I should be trading euro sterling? An opportunity maybe to reset some of those shorts on the downside on euro sterling. The bank did nothing today, and the service sector data was better than expected.
Yeah, I think euro sterling is still heading below 80. We're quite confident with that call. People are still looking at gilts relative to any eurozone security right now as a safe haven. You are seeing those flows still. Again, on the cable end, we're still not really calling for QE yet. It, of course, depends on what the Fed chairman's going to say today. But we just think last week's Fed non-farm payrolls number is not enough in itself to justify a revision to US growth data. So also in pure risk aversion times, the dollar is still more of a safe haven compared to sterling. So our target for cable still heading to below 150 towards year end. But low euro sterling, we're perfectly comfortable with that review. We're looking for 3-month euro dollar at 120.
Any emerging market currencies that you'd be, wanting to buy at the moment?
I think markets right now are going to revisit Asia emerging currencies in particular, who can benefit from stimulus out of China. So if you're still negative on the eurozone, if you think EM and also the US, can grow organically even with risk aversion coming out of Europe, you might want to be long the likes of Sing, Indonesia, Malaysia, and short Poland, Czech. These currencies who are more exposed to a downturn in Europe. A lot of people have been noting, Mexico versus Poland is pretty much a good high beta proxy for euro dollar. So I think these trades, especially on the Asia leg, are going to be revisited again.
Yeah, it's going to be a busy few hours, isn't it, as people try and revisit those positions?
I think so. We have 7 Fed speakers in the space of 12 or 13 hours, and about 5 of them are confirmed doves, I think. So suddenly the world looks a better place. So let's just see if the eurozone can back it up. And
but if I listened to Draghi, yesterday.
Yep.
He ain't pulling the trigger on anything anytime soon, is he?
No, I don't think so. That's what makes Europe special.
Special. I like that. That's probably the understatement of the year.
Geoffrey, nice to see you. Thanks very much indeed for joining us. Geoffrey Yu from UBS.